we have a new tool to further simplify warrant trading. From the homepage of warrants.com.sg, you will be able to find the exposure simulator under the warrant tools dropdown. On the internal website pages, you can find the exposure simulator next to the tab of the live matrix of a warrant. To use this tool, you need to already know the warrant you are intending to purchase, which you can choose using the warrant selector tool. You can then use the exposure simulator to estimate the warrant investment amount, either to replicate an equivalent level of exposure to a stock you wish to invest in or to hedge your current stock holding. Warrants enable investors to gain exposure to a stock by using less upfront capital than direct ownership. Let's assume that you previously held BYD shares that you liquidated from due to a need or want for cash, but are now keen to participate in the short-term upside price moves. In this case, you can replicate your exposure to BYD shares with less capital via BYD call warrant MNRW. Step 1. Type in the number of shares that you previously owned in your share portfolio or would like to own in equivalent shares. Thereafter, the exposure simulator will immediately tell you the estimated Sing dollar amount you need to invest in this call warrant, which is $19,140, to replicate an exposure equivalent to $99,529 worth of BYD shares based on its current underlying share price and the effective gearing of this warrant, which is subject to change depending on the time and date of usage. The number of warrants to buy with this $19,140 is 390,600 units at its current price of 4.9 cents. Step 2. Scroll down to the simulator break-even section and enter or move the slider to the price level that you think that BYD shares will rise until in the short term. That is, your exit level from the stock. If you had bought the shares at a price of 122.8 Hong Kong dollars, you will be making a 22.1% return and a dollar gain of 22,046 Singapore dollars. What about for warrants? To find out, step 3, increase the number of days that you are holding on to the call warrant to observe the impact to the warrant P&L. Increase it to the point where the positive gains from the warrant position equals to the dollar gains in the shareholding position. You will then derive the maximum number of days to maintain this call position. In this case, in order to replicate a shareholding of 5,000 units of BYD shares, the maximum number of days you can hold on to this call warrant MNRW based on your target exit price of 150 Hong Kong dollars is around 41 days, so that your absolute warrant gains will be similar to that on your shareholding position, assuming all other factors such as implied volatility remains constant. You will notice that holding onto the warrant for longer than 41 days, say 90 days for example, will continue to generate percentage gains larger than that of the stock's percentage gain. But the dollar price returned on the warrants will now be less compared to the shareholding position. But holding it for longer than 90 days, for around 118 days for example, will now generate a geared return of 22.4%, similar to the share price gain of 22.1%. Therefore, the maximum holding period for this warrant when looking at just the percentage returns is no more than 118 days for this warrant. But if you were holding shares which you are optimistic about in the long term, but worried about the stock being sold down in the short term, either due to market or company specific news or general sentiment in the short term, you can protect your shareholding by buying a put warrant in the interim and exiting from it when you think the stock has found a support level before it continues its long-term upward trend. For example, if you are keen on the DBS put warrant, 89W, amidst the negative sentiment in the current market, to hedge your DBS stock exposure, which you are retaining as you are long-term bullish, you can also use the exposure simulator to simulate your positions. Step 1, type in the number of shares that you currently own in your share portfolio. Again, you will immediately see the estimated amount of capital outlay required to buy this put warrant to hedge the stock portfolio value and the number of warrants to buy based on the current underlying price and the warrant price, as well as the effective gearing of this warrant at this point in time. Step 2, enter the price level that you believe DBS shares may fall until before finding support at the key price level, that is your exit level from the put warrant. In this case, if you thought DBS shares will be supported at 40 Sing dollars, you can enter that under the share price field. Step 3, increase the number of days that you're holding on to this warrant to observe the impact to the warrant P&L. Holding on to the warrant for 28 days, you will see that the gains from the warrant will offset the dollar losses from your shareholding position. And this is the maximum number of days that you can maintain this put position. For those not looking to hedge the losses in the shareholding, note that the maximum holding period for this put warrant is in fact longer, at around 94 days, where the warrant percentage gain of 10.3% is similar to the losses on the shareholding of 10.9%. Beyond these 94 days, the put warrant gains will no longer be more than the share price loss. Finally, note that the usage of index warrants will not perfectly hedge one's portfolio. For additional guidance on using the exposure simulator, feel free to call us at 6601-0289.